and check out a chart, okay? Now this is the NASDAQ 100. The time frame is daily, okay? If you don't know what that means, that just means that each one of these candles here, right there, that is 1 day. That's it, 1 day, 1 day, okay? That is all that means when you are on the D1 time frame, okay? Each of those candles is 1 day in duration, okay? So you can trade this in shorter time frames, but I have found that longer time frames are the best, okay? Just for my trading personally, I don't want to be sitting there at the computer all day, every day, getting in and out of trades. I would rather step back, look at the big picture, and get in on a monthly trade or a 6-month trade or, you know, longer duration, okay? It's less stress and you're getting the bigger picture on things. You're not just capitalizing on these quick moves and, you know, or news releases, you know, things like that. And some people, they prefer that method, and that is absolutely fine. There's nothing wrong with it. It's just not my style personally. I like to enjoy my life, and I'm not a gambler. I do not like it, so that's what that feels like to me. So as far as this setup, this is using the professor in the room, and it is an EA. It's got some indicators, and you can do this without, let me go ahead and I'm going to bring up a daily chart that does not have any indicators, okay? Because you can do that. You don't need, you know, these shiny objects that people are selling, okay? They're very helpful, and some people prefer them, and that's absolutely fine. I create them, I love them, I use them, okay? One of my favorites is the professor setup, and that's this. Well, it's slightly modified. We don't have the MACD in there, and there's a couple other indicators, but still, just using your brain, that is going to be your most valuable tool when trading any asset, okay? So first we'll start with the professor setup. Then I'm going to show you some with naked charts, okay? So as far as entering the market, first of all, this indicator right here, this is a Hull moving average. So when it is purple, we're in a short trend. When it is this teal color, we are in a long trend, okay? This right here, these are B-bands, also referred to as trend riders. There's a lot of different names for them. They all essentially do the same thing, and they have different settings based on your needs as a trader and the time frame that you trade, okay? So that is what this indicator is. These blocks of colors, you're going to see red, blue, gray, and I think there's one other color that comes up every now and then. I just haven't seen it in a while. I think there's like green that comes in there, but that is supply and demand zones. Okay, so this right here is a zone. It says a zone, a zone. It's very similar to support and resistance, except support and resistance are going to be lines, okay? And what I like to do is I like to identify zones by using support and resistance. So for example, right here at the top of this zone and the bottom of this zone, these are some key levels, okay? So one thing that you can do to enter the market with the NASDAQ is you want to see a series of a few things happen, okay? At least with this setup, okay? So right here, we have price. You see this candle right here, the body broke above that Hull moving average, okay? Because previously we were in a short trend, okay? So this candle body broke above and it held. So you see price kind of came back down to this support level, which is mid zone right here. So you can see price tested that level a couple times. Here, almost came back down to it here, okay? So, broke above. If you waited for this candle, came back below, but then we had a real nice healthy push to the upside. Okay, this right here is a very good indication that we are going into a consolidation period or changing the overall trend. At this point here, you had already broken the previous highs. Okay, you have your leg, 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 leg. Okay, so you're already, before this candle, starting to create that long trend. When you come up to the Hall moving average from a gap like this, okay, so price had broke below over here, headed way down. You see this huge gap. Now this gap, look how many pips that is. That's a ton, okay? So that is a very, very large move. So when you have a gap like that and price starts to create a first leg, and then here you broke that previous high, see that right here, broke above, here we're right around the same. But then here, this candle body broke above that previous high, and then it continued up and started to create an even higher high, okay? And we've really narrowed on in up to that Hall moving average. So at this point, this is a good indication that price is, in fact, headed to the upside, okay? The other indication that we have here is the MACD. Down here, as you can see, let me go back a little bit further. So before this short trend here, okay, if you look here, price was headed toward that Hall moving average, just like I was talking about over here, but to the downside. It broke below and that candle body held. You waited for that next candle, and look at that, it continued down, okay? We're not even having resistance here. Prior to that, right here, the MACD crossed to the downside. And that happened before we even crossed below that Hall moving average. So you have first indication right here, second indication here, and then it continues down. Okay, so those are some major things to look at. Now we come over here and look at that MACD again. We had a cross to the upside. Okay, here's where that cross happens. See this little arrow here. This is our first blue line. Okay, so that means that that MACD has flipped at that point with this. Price started heading up, broke previous high right there. Now you can get into trades as soon as these crosses happen, but keep in mind that these crosses, especially when you're in a consolidation period, they'll go back and forth, and this is a prime example of that, okay? So be aware, don't get yourself trapped into anything, okay? Make sure whatever you're following, so like say with this setup, I'm waiting for that MACD cross. Then I'm waiting for that candle body to break above or below that Hall moving average. So that's second indication. Second and third indication, I guess, would be the MACD flipping. Okay, so like right here, here's your red line. Happened right around the same time as that candle body break. Okay, so we have three things now that have lined up, and then we have continued to create a lower low. Now over here, same thing. We have our MACD cross, first indication. Here's our second indication right here, that flip to the upside, or this little arrow, same thing. Then price created a higher high. There's our third. When you have three things like that line up and on the daily time frame, you're in a pretty solid state of entry, okay? That's a good wait, you're not jumping the gun, none of that, okay? But the next thing is before you enter that trade, what are you going to do as far as a stop loss, take profit, all that, okay? And what do you risk? So, like I'd already said in the presentation there, or that presentation intro, I guess, is that don't ever risk more than 5%, okay? 5% is a great thing to stick by with trading any asset, okay? That 5% trading rule, all right? So, like I said, 3 things lined up. Now, for example, here with this one, here's our cross, here's our flip, here we created higher high. Here was our first higher high, but here was the one that I would wait for personally. Now, you're not going to gain as many pips, but it's just a little bit more solid, because right here, what could happen is this could be a deeper correction. See this? Because you've got this candle here. So I personally would wait for that candle body to break and hold above, which happened here, okay? It's better to wait and be safe and miss an entry than to just enter and miss out because it's a deeper correction, okay? So, but that's just my trading style. I am not a high-risk trader. But here it happened. So what would we do as far as a take profit? So if we look over here, you want to look at past history. That's the biggest thing, all right? So, oops, maybe. If we look over here, this was our magical, our key level, okay? Price broke above it here. So a first take profit would be right about there. Now that is at the wicks, so you may want to bring it down to that candle body, okay? Just like right there. You see how I drew that in? Right here and here. Those are that is a previous, at this point, resistance level, okay? And if you go back even further, this candle came down to there. And this one, I mean, you've got your wick. But you can see very clearly that this is a solid resistance level. So this is a great take profit to shoot for. Okay. Now, as far as other levels, where did price test? That's the big question. So I can see real clearly without even having a line right here. Okay. Don't look over here. This hasn't happened yet. Actually, let's not even look at it. How about that? So here's our candle body break to the upside. Just look at the previous history. Okay, so here was our first take profit. Now, second take profit. Where did price test? So I'd say right here it tested with this candle. Up here it tested with these candles. Right here and here with these candles. Okay, so pick a happy medium for that. Okay, so what did I say? I said it tested, well, actually it tested here, it tested here, and about there. So what I would do is I'd bring it to about here for that next take profit. Okay, third take profit. Where did price previously test? Ooh, and actually, okay, second take profit, if you go back a little further on that chart, look at that right there. That would have made me actually bring that take profit down to about there. See these candles right here? And it still lines up with our resistance levels here. Well, actually, previous support. Depends how you look at it, okay? Previous support and resistance levels, all right? They are key levels always, all right? So, right here, this is a solid take profit level. Where's another? So I'd say price test, if we're looking here, price tested here, kind of all in this area, up to about there. Okay. Now, if we go back further, here, that's where it tested. Here, it tested. Bottom of that, bottom of that. So you find your happy medium yet again. Now, this isn't as many pips as here, okay, but it's still a key level. All right, so I like to lay those out and find that happy medium. I would rather gain less and keep my profits than to gain more, but then lose more, okay? So here's another take profit level. Right here, top of this candle, bottom of this candle. Right here, see price testing, and break, testing, right here, testing all the way along there, and here. See how price goes in between those levels. It's that past history, okay? So, look at that. So then we have, here's our break to the upside. Now we've mapped out our take profits. And you can continue. Use a trail stop. If you don't know what a trail stop is, go to the free education portion at slicktrade.net. And it's going to teach you all about support and resistance, supply and demand, how to trail stop, all of it, okay? I spent a lot of time creating these presentations and videos, and I know that they've helped a lot of you, and just from the feedback that you've given, and I want to continue to help you guys. So again, if you're new to trading, or if you just don't understand some of the terminology or what I'm saying or how I'm getting these levels, please check out that free education. Okay. So right here we break, and boom, continued right up past our first take profit. Then we get a little bit of a test, and then bam, blew right up to there, hit the next take profit, and then the next. Then kind of came back and tested. Now, if you're trailing this, you may have gotten out at this point, but as far as trailing, especially in these daily time frames, what I would do is bring it up again to previous support and resistance, all right, but give a little bit of a gap. So instead of bringing it real tight to here, I'd be a little bit looser as far as about to here. See this level? And that gives that little bit of gap, because those tails, that's when you have a tail or a wick, okay, versus a candle body. Sometimes news can create those wicks. Things that are happening in the economy can create those wicks, okay? But I really like to focus on that candle body and just check in every few days and slowly move it up, okay? But with that trail stop, I like to give that gap, because those tails, a lot of the time price will retest to those levels and will take you out of that trade, but you could have stayed in it for months more if you just would have given a little bit of a gap, okay? And profit's profit, but just be aware of that, okay? Watch those wicks like that, okay? So at this point, and watch for legs, like once you've created a leg, then move your trail stop up below that previous leg, all right? Because price could retest there, and you could get stopped out in a deeper correction. There's not much you can do about that. Deeper corrections, they'll always get you, unless if you're trading very with a higher risk, excuse me. So just be aware of that, okay? So right here, price had it up. Here's our leg. Here's a leg. Here's a leg, and here's a little bit of a deeper correction, okay? So if you had that gap, that tail, that probably would have taken you out about there, okay? Unless if you were just manually trading and happened to check in on this day instead of this day, okay? So here's our consolidation period. This was, like I said, deeper correction, and then headed up and created a new high. So at that point, you'd bring up your trail to about here or so. See that? Leave that little bit of a gap. I still created another high. Okay, once you create that next high, bring it up again. Okay. This is a beautiful move. If you continued to trail this up and you just left a little bit of a gap with the bottom of the wicks each time. So here's that trail. Right here. Then you've created that next one, so you'd bring it to just below that wick. And then here's our next high up here. So you would have brought it about here. And then here's our next high here. And you would have brought it about there. See how I'm just trailing this up, okay? Created another high. See how it's creating a new high each time. Then you bring it up to about here. After this, because we created a new high here. See that? So create a new high, a new high, a new high, a new high, a little bit of a deeper correction, new high, new high. Okay, so here's our next new high. Here's this wick down. Such a trail about there. And with this deeper correction, it looks like it's probably a news release, but you, if you were trailing, you probably would have got out about here on this candle. If you happen to miss out, stayed in the trade, could have continued even more or even further, okay? So there's our high, here's our new high here. If you happen to still be in it, trail it up to here. New high here. Here. And then it comes down here. So if you brought your trail up to about there, right here is where you would have exited. Okay. If you kept it down here, missed out, anything like that, came back at you here. So that is how you can trade that and get the most out of it, at least with that setup. Okay, so let's go ahead and do one more, okay? Let's look at the, right here. So we had, well, here's another cross too. Okay, let's look at where we switch. So here's our trend rider, okay? We're in short trend, price came up. Here's our MACD cross to the upside right here. Let's look at this. Here's our cross to the upside right here. Here's our test. And then we created a new high. Here's our new high right here. And we're at that Hall moving average. But that candle body did not break. See how it came down for a few more days? Here is where it broke. Broke to the upside, bam. And also here's our MACD flip to the upside, which is where this little arrow is, okay? So there's your confirmation right there. And we filled in that gap. That gap from the Hall moving average right there, bam. Broke up, and there we go. Headed to the upside. There's our leg, leg, leg. See how it's creating a new high, 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 a new high. When it creates higher highs and higher lows, you're in that long trend. Then it comes up to this trend rider here. And right here in this candle, or you could even say this candle for better validation, but either way, between those two right there, you continue that long trend. So continue to trail it up. Bam. Here's our deeper correction. Bam. Higher high. Still. And this is a higher low. Higher high. Higher high. Okay. Now, here, we're coming down. We're filling in that gap. See what I'm talking about with the whole moving average? Okay. Oops. So here is a cross to the downside. there's an indication, or first indication, that it might be time, which is right there. Price starts to fill down. There's your next. MACD flips to the downside, third confirmation. And then we start testing that whole moving average right here. Bam, and this candle breaks. That's a pretty large move. So one thing to consider is that when you do break, especially with a heavy drop like that, you might want to wait a day or two just to see what happens. Okay. Because here's our correction. And see, if you were just basing this off the wick, that wick would have broke probably and exited you. Okay. If you're manually trading, you're just looking at those candle bodies that did not break that previous level. Okay. So either way though, price headed back down and then broke below here. And there's a real nice move down. Okay. Then price comes up, starts to fill a gap, breaks above right here. Oops. There we go. Then starts to go higher, breaks down. Then we've got creates a, it's still, as far as a low, this is still a higher low than the previous low at that point. Okay. And then we create a new higher high. That's previous high, next high. Higher low, higher high. Okay. On this one, you had a MACD cross here. Start to fill that gap here. Flip to the upside with MACD. Trend riders up. Then here is your break above that whole moving average. And then you start to create higher lows and higher highs. Okay. So multiple ways to trade it using that setup and just some basic price action analysis. So let's say you don't have any paid indicators. You don't have a setup that you use. Okay. You're new to trading. All right. So let's look at some of the things that come with MetaTrader 4. Now, this is just a traditional MACD. All right. It's not as nice as the other one that I had up. I think that was the color histogram and the 2 lines change color. Okay. You can go to MetaTrader 4 and download some cool ones. Just look up MACD crossover alert or MACD cross indicator, and it'll give you some different options, okay, to choose from. This is just a basic single line MACD, but you can still get what you need, okay? So if we're just basing it on the MACD, let's go ahead and, well, and actually, hold on. You should also throw on here, if you go under trend, moving average, okay? Don't want red. Let's get some better colors here. Well, actually, let's do a white, so that'll be easily visible. And the period is going to depend on what time frame you're trading. Okay, this is the daily. Let's go ahead and look at 12. I'm going to use the simple, and we're going to use it at the close of the candle. Okay. And then let's go ahead and, oh wait, I can just grab another one from here and do 26. So 12 and 26. Okay. And let's grab, let's do pink. Sure. All right. So now you've got these crosses here. Don't need this up here. Okay, we're zoomed out, we're looking at the bigger picture. Okay, so let's go ahead. Oh, and hold on, one more. So sorry, I want to pull up the 200. This is a 200 day. Just to have on the chart as a visual. This is going to give you an overall trend. Okay, just something to look at. It's going to give you some key levels, so you can see here, 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 here. Price tests this level. Okay. So, and when you have a break of this level too, you get some pretty heavy momentum. All right. You can use it similar to the Hall Moving Average. I just like the Hall Moving Average a lot better, personally. So, here we go. Things to look at. So, if we look at the MACD, let's say we'll start right here. So price is headed up toward that 200-day moving average. Here, you've had the MACD flip to the upside, right here. Okay, and before that, you can see we started to lose some momentum as far as heading to the downside. Okay, these bars are within this line. That's one thing you can look at. It's just an added little bit of confidence. Okay, continues to head up, head up, head up, and bam, here's our flip. Now if we look up at the chart up here, we have a cross of the 12 and the 26 to the upside. The candle bodies are above both of those, and we're closing in that gap coming up to that 200-day moving average. Okay, now key levels to lay out. Price tested here, bam. We've got a range here because of these here. Okay, and here. See price tested, tested. Some short little consolidation periods. If you looked at those probably on the 4-hour time frame, you'd see some serious consolidation back and forth in between those levels. Okay. But then we broke and continued down. Okay. Like I said, first indication, price is headed up, losing momentum. And it's within this line, prices. This cross happened here. The flip to the upside for the MACD happened here. It happened within 2 days. Now, like I said previously, a lot of times price is going to test down or test up, depending which way price is going, okay? In this scenario, we're hoping that price is going to head up. So, comes down and it tests this level. See? Right here. But candle body did not break below. And then it pushed above right there. This candle right here shows us that price is headed to the upside, okay? It really wants to push up. We broke a previous high, excuse me. We broke the last previous high. Words are not coming out, okay? Continued up. Then it came down and it tested this level. Would you look at that? See? History repeats itself. All right. Then broke even higher on this candle. See it break this previous high? Right there. And it's really filling in this gap. Okay, so at this point, after this would be a pretty good indication that you're good to enter along. But remember, right here, see this? We had a lot of testing. So this could be a deeper correction and then continuation of a short. Okay, so if you were to enter here, you'd want to really, really watch this level because price tested there. And the potential for a deeper correction would be at the bottom of this level. Okay, see that little range? It's a very important range. Keep it in mind. You really want to lay these support resistance levels out, okay? And know this so that you know what to be watching for and when to enter or exit a trade, okay? So if you waited for this little range, here was your entry then. Okay, if you get in a little sooner, this would have been your entry. But if you waited for that, for price to really get past that, that's here. Okay, so at this point, it's not a deeper correction. And then price headed up, came down, almost tested to this level, broke up. This would be the next level you're watching. Okay, so your first take profit zone. See this right here? See this gap? That would have been a real nice, and price testing right in here, back and forth. So that would have been a solid first take profit. Okay, and we hit that, broke above it. Then your next level you're watching at is right here, this 200 moving average. You can see price tested it for about a week, then broke up. Okay, headed up for about a week, and then price tested down here. Okay, so it did not break below the previous high, it just tested it. You see that candle wick right there? And it's right at that 200 moving day average. So it stayed there for a couple days, and then we had a heavy momentum push to the upside. Okay, so you can see, came up, created a new high, next high, higher low, higher high, higher low, kind of. I mean, it really just kind of pushed on up from there. Here, created higher high, and then price crossed. The 12 and 26 crossed to the downside right here. Do you see what else is happening that I said to watch for? Momentum headed down on the MACD. These bars are under this line. Those are all indications that you should get out of that trade. Okay? Or really watch it. But then here, bam, flip to the downside right there. Came up, there's our little test, and bam, created a new low. Came down, now here's that 200-day moving average, came down to here, and then headed back up. So right here is really consolidation period, especially if you look at like the monthly or weekly time frame. Either one of those, you'd see a nice little consolidation period here until, bam, created a new high. Higher low. A little triangle move here, triangle trend, and then broke out of it and continued up. You see it get tighter and tighter right here, and then it broke and created a new high. So you see these levels, that's all you have to look at. You got to look at previous support and resistance. You have to look at what the market's doing, and then use a couple indicators to help you enter and exit the trades, okay, with confidence. You can just trade any chart naked. You don't need to have indicators, but you do need to have a solid understanding of support and resistance, zones that price could head to, and just have a solid plan. Again, don't risk more than 5%. And trail your stops. You know, that's what's going to get you the most out of it. Are you going to miss out sometimes? Yeah, but that's okay. Profit is better than loss. Okay? So you just want to build it up, and you want to build your confidence, and you want to have a solid plan for what's for trading the market or any asset. Okay? So that's about it. I hope that this video helped you guys out and helped you to get a little bit of confidence as far as trading the NASDAQ 100 or any asset for that matter. And I think that's about it. All right. If you are a Slick Trade member, I will see you in the room. And if not, like I said, check out our free education. We've got a lot of stuff on there. And we're constantly building new things. If you have any requests for videos, let us know. May not get to it right away, but I do my best to try and answer questions. So you guys have a good one, and I will talk to you soon.